So glad to be with you. So glad to be with you on today. This promises to be one of the best things I'm certain you've done on today as we are preparing to move into something that I believe is a game changer as we pull back the curtain and show you some things. Right now, at this very moment, your 740 credit score is being used against you, not by your own bad decisions, but by a system that was never designed to take you where you're trying to go. And if nobody has told you that yet, that's exactly why you're still hitting the same ceiling over and over again. I've been inside the system for 37 years. I've sat across from people who did everything right, paid on time, kept utilization low, hit the magic 740, and still couldn't unlock the capital they needed. Today, I'm going to tell you why a 740 credit score is not the ceiling breaker you may have been told that it was. Why the score was never designed to free you from the ceiling in the first place. There is a structural gap that sits directly between a high credit score and actual financial positioning. The banks know it. The lenders know it. Every institution you've ever walked into knows it. And once I show you what it is and why it exists, you'll finally understand why you've been doing everything right and still hitting the exact same wall. Now, do me a favor. Drop a 740 in the chat if you've hit this number and still feel stuck. Now, I want to welcome you in, everybody. Good to have you live with me on today. Before we go any further, I want to speak straight to the people on this video who did exactly what they told you. You chased the score, you hit it, and then you waited for doors to open and they didn't. That's not a coincidence. And it's not because you did something wrong. By the time we're done today, you're going to understand why, and you're going to see the real game, maybe for the first time. So do me a quick favor. Hit the like button right now. We're growing something here, but we need you to like it. This is the only way the algorithm is going to share this with more people, because this information needs to get to people who are stuck at 740 and don't know why. Let's start with something nobody explains to you correctly. A FICO score measures one thing: how reliably you manage debt. That's it. That's the whole score. It was designed by lending institutions for lending institutions. It tells a lender one sentence: this person is a safe borrower. It does not say this person is positioned for wealth. A 740 means low risk borrower. That's all it means. The system grades you on how well you serve their interests, consistent repayment, predictable behavior. The score measures debt management performance, not wealth building capacity. And it's important that you get this. There is a distinction the system never teaches you. Score is what you owe responsibly. Position is what you own strategically. Two completely different things. And they've had you chasing only one of them your entire life. Let me ask you a question. How many of you were told by a bank, an app, a well-meaning friend that once you get a score or get your score up, things will change? I want you to really think about that for a second. Because I already, and I mean I already know the answer. Almost every single one of you has been told that. That advice isn't wrong, it's just incomplete. And incomplete advice repeated enough times starts to feel like the whole truth. The credit bureaus don't work for you. They are data companies. They sell your financial behavior to lenders. A 740 tells a lender this person pays back what you give them. That's valuable to them, but not necessarily to you. I'm going to say that again. That's valuable to them, not necessarily to you. Because the truth of the matter is this: a bank isn't in the business of making you wealthy. A bank is in the business of managing risk. And a well-trained, on-time, 740 scoring borrower is exactly the risk profile they built the whole model to produce. So here's what I need you to sit with today. You didn't fail at this. You succeeded at exactly what the system asked of you. The problem is what the system asked of you was never the same thing as building wealth. Never the same thing as building wealth. And in the next few minutes, I'm going to show you the 5 specific places above 740 where this plateau actually locks into place. Most of you have never heard even one of them named out loud. So stay with me. This is where it starts to make total sense. Let's get to the 5 invisible ceilings above 740. The score is only the first filter. There are 4 more the system never told you about. Let's name every single one of them. Ceiling 1. Debt to income ratio. The moment a lender sees 740, they immediately check debt to income ratio. A 740 with a high debt to income equals rejection every time. The score got you in the door. DTI slams it closed. The credit score is the bouncer, but DTI is the owner of the club. And the owner doesn't care how good you look at the door. Ceiling 2, file depth versus file age. A thin file with a 740 is still a thin file. Score plus age plus diversity equals strong profile. Most people hit 740 on a narrow file, 2 cards and a card note. Lenders looking for serious capital access need profile architecture, not just a good number. Ceiling 3, personal credit versus business credit structure. A personal 740 means nothing to a commercial underwriter. Evaluating your business credit. 2 completely separate reporting ecosystems. Most entrepreneurs are building on the wrong foundation for what they're actually trying to do. You build a 740 on the personal side, while the business side, the side that determines your real capital ceiling, has nothing. The system let you do it because a personal borrower is exactly what they need you to remain. Now, this is alert for all you business owners. If you run a business, this ceiling is the one costing you the most right now. A commercial lender does not read your personal 740 the same way a consumer lender does. If there is no business credit file behind that personal score, you are asking a commercial underwriter to fund you off a document they were never trained to trust. Ceiling 4. Trended data. FICO 10T. It's not just your current utilization. It's the direction of the trend. FICO 10T and VantageScore 4.0 look at behavioral patterns over time. A 740 achieved by a rapid paydown looks different to the model than a 740 maintained over 24 months of disciplined patterns. I want you to get this. I had a client, I'll call him Terrence. Rapid paydown right before applying. Score jumped to 742 in 6 weeks. but they were denied for the exact product they needed. Not because the number was wrong, because the trend line told a different story than the number did. The system wasn't looking at where he landed. It was looking at how fast he got there. Ceiling number 5, leverage structure. High zero or a high score, zero strategic positioning of credit lines as capital vehicles. The score gives you access to lines. What you do with those lines, how they are structured, sequenced, and deployed is what determines whether you build leverage or you just borrow. The system gave you the key, but it never told you what the key actually opens or how to use it once you're inside. This is another interesting thing for a business owner. This is the ceiling that keeps profitable business owners personally guaranteeing everything they build. A key with nowhere strategic to use it just sits in your pocket. Leverage structure is the difference between a line of credit and a line of credit that is actually working for you. Now, this is very, very important. 5 ceilings, all above 740, all invisible until right now. And every single one of them was there before you ever hit the number. The score just gave you the confidence to stop looking for them. Now, this is important. Now, before we go any further, I need to correct something the entire financial education industry sold us. Something about 740 itself. And it's the part that keeps people stuck the longest. The why not, the mandatory, why not? Here's what not to believe about 740. Why not to treat 740 as the destination? It is a qualifying threshold, not a positioning milestone. Why not to stop building after hitting 740? The most dangerous moment is when you feel like you've arrived. This is also a why not to use personal credit as your primary business capital vehicle. Wrong tool, wrong game. Another why not to confuse credit worthy to a bank with capital ready for wealth building. Those are 2 different certifications, and only one of them was ever designed with your wealth in mind. The financial education system, the gurus, the courses, the YouTube channels, they all sold you 740 as the goal because 740 is measurable, teachable, and achievable. What comes after 740 is harder to package. And the institutions funding those messages would prefer you stay focused on that magic number. This is important. The real lesson is this. The people most at risk are the ones who hit 740 and feel validated, because validation is where the plateau locks in. Same habits, same positioning, same ceiling, but now with a better score. If that's you right now, if you hit the number and something in you settled, relaxed, stopped pushing, I'm not telling you that to shame you. I'm telling you that because you deserve to know the number was never the finish line. It was the entry fee. The entry fee. So where is the gap actually? The gap is not the score. The gap is the profile architecture behind the score. 3 layers to a positioned profile. You've got to get this if you get nothing else. Layer 1, the score, what they see, what walks you in the door. Necessary, but not sufficient. Layer 2, the profile depth, what they evaluate second. Here's what it is. Account age, mix, utilization patterns, trended behavior. This is where most 740 holders fall apart under real scrutiny. Layer 3, business credit integration. What determines the real capital ceiling? This is the layer the system never teaches. Personal credit and business credit operating as a unified strategic structure, not two separate things running in parallel. Banks don't lend to scores. I'm going to say it again. I need you to hear this. Banks don't lend to scores. I'm talking about whether you're talking loans or even credit cards. They lend to structures. A 740 with no structure gets you a car loan and a credit card increase. A positioned profile gets you access to major capital. Major capital. Let me give you a quick story. I had a client, 748 credit score, rejected for business financing 3 times in 18 months. 3 different lenders, 3 different programs, same answer every single time. The score wasn't the problem. The structure was. Once we address the structural gap, same person, same habits, same 748, everything changed. Not because the score moved, because the profile behind the score finally matched what the system needed to see. Because here's what I want you to remember. Same score, different outcome. Not because of effort. You've been putting in the effort because of positioning. Same person, same habits, but different positioning. And it will make the difference every single time. The credit system doesn't reward effort. It rewards structure. And structure is something you can learn. You've probably been told your problem is discipline, budgeting, or simply working harder. Those things may matter, but they may not be the root problem. The deeper issue may be a financial system you have not been shown how to see yet. So I built a free tool to help you identify which layer is creating the most friction. In about 5 minutes, you can learn it. It's called the CBL Financial Positioning Diagnostic. It's free. The link is in the description. No cost, no pressure, just absolute clarity. And once you have that clarity, if you recognize that the issue is not simply your score, but the structure behind it, the CBL Wealth Blueprint is built specifically for that next step. It's not for beginners chasing a score. It's for people who already have some financial foundation and need to understand how credit, business, and leverage work together. If that story sounded familiar, if you've been doing everything right and still hitting the same wall, take a look at the CBL Wealth Blueprint in the description. Now, this is important because here's what I want you to remember. Same score, different outcome. You got to get that. Same score, different outcome. Last time, same score, different outcome. Not because of effort. You've been putting in the effort because of positioning. Same person, same habits, but now I've got a different position, and it makes all the difference. The credit system doesn't reward effort. It rewards structure, and structure is something you can and you must learn. The blueprint begins where this video stops. Here's where the CBL Wealth Blueprint addresses the structural gap between a high score and real capital access. The integration of credit, business, and life as a unified positioning system, not 3 separate things. The profile architecture decisions that determine what lenders actually see when the score opens the door. And if you're an entrepreneur watching this, understand this is the layer that determines whether your business ever gets funded on its own strength or stays permanently tied to your personal file. That's not a credit problem. That's a structure problem, and it is solvable. Because the truth of the matter is this: the score got you this far, and that's real. But the ceiling above you isn't a credit problem. It's a positioning problem, and that's a different curriculum. Credit isn't just about borrowing money. It's about positioning yourself for opportunity. And at 740 is only the beginning of that positioning, not the end of it. Now, I want to share with you some questions I get all the time because these very questions may help you today. Very important. Question number one that I hear all the time. Duane, if 740 isn't enough, what score should I be chasing? Wrong question. You're not chasing a bigger number. You're building a bigger structure. The number is a byproduct, not the goal. Question two, is 740 even worth having then? Absolutely. It's the entry fee. You need it to get in the room, but nobody hands you the deal for showing up. You get the deal from what you brought in the room with you. Question three, how do I know if my structure is the problem? If your score is strong and your approvals still feel inconsistent, that gap is your answer. The score is doing its job. Something behind it isn't. If you want help identifying which layer is creating the most friction, the CBL Financial Positioning Diagnostic is linked in the description. It takes about 5 minutes and there's no cost or pressure attached to it. Question four, is this only for business owners? Absolutely not. Everybody watching this has a structure behind their score right now, whether they built it on purpose or not. Business owners just fill the gap the fastest because the dollar amounts are bigger. So this is important today. Drop a comment below and let me know, where are you right now? Are you at 740 and still feeling the ceiling? I want to hear your situation. I read every single one of those comments. And listen, do me a favor again. Subscribe to this great channel. Hit the like button because we want as many people to see this so they'll be on top of this information just like you. Listen, let's get this straight today, once and for all. Your credit score is simply the entry fee. But your success inside the room where your score got you will be based on the positioning. The positioning is all about your profile. What story does your credit profile tell the institution you've just applied to for that serious card, that serious loan, that mortgage, that car loan that you want the best interest rate on, that capital financing you want for your business? What does your credit profile tell the lender about your story? Does your profile tell them you've just fixed something in the last 4 to 5 weeks? Or does it tell them this person has been trending this direction for some time? Now listen, if you have not been trending in the right direction, you can start now. Work on the trend, build the proper profile, because at some point, they're going to look at you and see, oh, he's been doing this for 3 months, 4 months, 5 months. It's now a trend. It's a pattern. It's a habit, and they're going to believe it. And it's going to impact what happens inside the rooms your credit scores get you in. Well, listen, we're going to help you get the score you deserve. We're going to share the insights that will help you raise that score. But trust me, that's just the entry fee. We've got to have a strong profile so that once we get inside the room, the profile will get us the yes we've been waiting for. Well, listen, my friends, I want you to be blessed. Share this with someone else who needs to hear it, because trust me, people think that their goal in life is a number, but the number is simply the entry fee. They will get denied and hit a ceiling in their income with a beautiful number because of what they didn't know. Be blessed. Have an absolutely awesome rest of the day. I look forward to connecting with you again real soon. Greetings to you too, each and every